What's going on, guys? Mortgage and real estate broker Michael Watkins here again. And today I'm going to talk to you about 4 things that you're doing that's stopping you from buying a house. Listen, if you don't want to buy a house, then keep doing these 4 things. But if you do plan on buying a house with the new year coming up, stop doing these 4 things. I'm going to dive right in. Number 1. You're not saving money. According to a poll that was done in July of 2023, Americans have less than $5,000 in savings. Now, with the real estate market being the way it is, you need at least $20,000 to $25,000 to buy an average price home, a home priced anywhere between $350,000 and $400,000. Here in my market, South Florida, the average home is about that price, right? Homes aren't $250,000 or $300,000 anymore. A 3-bedroom, 2-bathroom starter home for a young family or a family of 2 or 3 people is going for about $400,000. So you're gonna need at least that much in savings for your down payment as well as for your closing costs. 11% of Americans have $0 in their savings account, and only 14% of Americans have over $20,000 in savings. Savings is critical when it comes to purchasing a house. One of the more effective methods to save money is to save it in pre-tax vehicles like an IRA or maybe a 401k or just a regular savings account. If you can have a certain percentage of your income automatically deducted and put into a savings account every pay period, that would be a great way for you to start saving money. I'm gonna give a plug here to WEBULL, right? It's one of the services that I use. It's an online investment platform. And what you can do is you can have money transferred every month from your checking account, from whatever bank account that you have, over to this platform that not only helps you save, but you can also be investing at the same time. Now, I'm not an investment advisor. Always do your own research, but WEBULL is a really convenient platform. I'm gonna put the link down below if you're watching this on YouTube so you can do some research on WEBULL. Really easy to start an account. Check it out. It's a great way to invest and save at the same time. Which leads me to number 2. If you don't want to purchase a home, keep putting everything on credit. Like the old saying goes, if you can't afford to pay for it in cash, you probably can't afford it. And it's a good rule to live by because look at this stat. The total outstanding credit card balances is approaching $1.1 trillion. Wow. We're moving away from living within our means and putting everything on credit. If your DTI exceeds 45, 50%, chances are they're gonna say you have too much debt and you're gonna be considered a high risk for getting a mortgage. Keep your credit balances low, pay them down as soon as you can. And if you use a credit card for something like getting miles or points or something like that, there's nothing wrong with that. But if you get too excessive with it and you say, you know what, I'm gonna put this dinner on there, then I'm gonna buy this pair of shoes that I like, and you start going on and on and on, by the time you know it, you've got $1,000, you've got $2,000 on that credit card, and now you can't just pay it right off like you initially intended. So be very, very careful when you use those points credit cards, those miles credit cards. Listen, I love those credit cards. They give me miles and stuff, but the caveat is make sure you have the cash to pay it right off again so you're not paying high interest rates. If you're finding value in this video, don't forget to like, hit the subscribe button, and share this with someone you think might find it valuable. And the number 3 thing that's preventing you from buying a house is you're becoming complacent. You're comfortable with renting an apartment. Listen, I had a friend of mine who rented for the better part of his adult life. It's mind-blowing to think about the amount of money he threw away, I should say, on apartments, right? He could have paid off a house already almost. So don't become complacent. Don't get comfortable with renting, right? And I know it's easy to do because it's so convenient, right? When you rent an apartment, you don't have to worry about maintenance. You know, if the refrigerator's broken, you call the landlord or call a maintenance person and they come over and fix it, whatever appliances, whatever needs to be repaired. And that is the draw. But here's the thing, when you're renting, you're paying a mortgage. It's just not yours. You're paying someone else's mortgage and you're helping them to pay off their house. you're building equity for someone else as opposed to building equity in your own property, owning your own real estate. So don't get comfortable, don't get complacent. Listen, I've done videos about this, and I'll put a link up here to another video I did about what it takes to purchase a home. It's not easy, guys. It's not easy. It takes discipline. It takes commitment, and it's hard work. It's tedious, repetitive, hard work, doing all the things that you're gonna be required to do by the bank, the amount of money that you need to save, all of it. It's hard work. And if the markets are going up and down, it's gonna be even more difficult, but it's worth it. And number 4, the 4th thing you're doing that's gonna prevent you from buying a house, and that's not keeping up with your salary, not making sure your salary is ahead of or at least on par with the rate of inflation. Listen, as you can see here, the rate of inflation hovers around 3% year over year. If you're still earning the same amount of money you were earning 5 or 10 years ago today, then you're behind the 8 ball, right? Everything, as you guys know, I don't need to tell you this, as you guys know, everything increases in price every single year. Everything from your groceries to the clothes you wear increases in price, right? So you need to make sure that the income, how much money you're earning, is sufficient to prove to a bank, if you're trying to buy a house, that you can repay a mortgage. If you've got a car payment, if you've got credit card bills and other expenses, a bank is going to evaluate what's called your DTI, your debt to income ratio. And in plain English, that simply means how much money are you bringing in and how much money are you paying out? What is the ratio of that? How much of your money is going to your car payment, to your living expenses, to your groceries, to whatever other debt you may have? And for you to be a viable candidate for a mortgage, at least to a bank, you need to keep that number below 40%, meaning not more than 40% of your income is going towards expenses. Now, what are some of the things that you can do to make sure your income is getting better? I mean, I know if you go to your boss and say, hey, give me a raise, I want more money, that might not work. So maybe you have a side hustle, right? I have friends who drive Uber to supplement their income, and that gives them an extra $200 or $2,500 a month. This can have a massive impact on qualifying for a mortgage, showing the bank that you have enough income in addition to your main job. Having an extra $2,000 or $3,000 a month could be what gets you over the hump and qualify you for the mortgage for the home that you want. And while we're on the topic of starting side businesses or becoming an entrepreneur, Capital One is a great business-friendly credit card company, and you don't need to have an 800 credit score for a Capital One credit card, guys. It's a great way to start out in business, start a relationship with a bank who's going to help you build the business credit you need to go on to bigger and better things. So check out the link below for a Capital One credit card. So to recap, make sure that you're saving money. Number 2, make sure that you review your credit. Don't put everything on credit. Manage your credit responsibly. Number 3, don't become complacent. Don't get comfortable with renting and continuing to rent. And number 4, stay on top of your income. Don't forget to smash that like button, hit the subscribe button.